My name is Jared Halbert. I'm with Brick Mortgage, a company that I own, a small little broker shop here based in Queen Creek, Arizona. And of course, we service all of Arizona. I have clients west side, east side, Flagstaff, Payson, the White Mountains, Taylor, Snowflake, that area. So we're all over the place. Even Tucson, believe it or not, we'll do some loans down in Tucson. So no, all over Arizona, we'll take care of it. But what I want to do is jump back into this whole video thing and jump back into what's happened the last 3 years and how the market, the real estate market, has shifted and what it looks like today. It's probably different than what you're thinking. So what's changed? What has changed? The biggest change that we're going to see is interest rates. Interest rates changed the whole game, right? So we were used to, a few years back, we were used to seeing rates in the twos and threes. I say twos, mainly threes. I think if people were to say something, obviously there were some in the twos, but mainly the threes. And then now where are we looking? Now we're up in the sixes, okay? And there was a time that we were in the sevens. And so all that shift, basically rates doubling, maybe even tripling, it almost paused the industry. The industry was like, what's going on? People stopped buying houses. There was this weird, not weird, it was obviously that's what's going to happen when prices go up. But there was definitely a stop, uncertainty, I guess is the word I should go for. And so everybody just stopped buying. So that 2022, 23 were a little bit rough for the mortgage guys. I know a lot of guys who got out of the industry, which is sad. But what's happened in the last few months has really started to change the industry again. The market had to adjust. It had to change. It had to stop. And that's just part of real estate, right? Ups and downs and rates going up and down and home values changing. That's part of the industry. And so we just have to adapt to it, as mortgage guys. So anymore, it's not so much about chasing the lowest rate, although I get a lot of rate shoppers. I probably get more rate shoppers now than I ever have, even though rates are constantly changing. I'll quote somebody a rate and in 30 days later, it's totally different. And then the next 30 days, it's back up again. And it's because of all the changes and all the things going on, it's still a very volatile market. And that's why I like to lock people early, because you don't know what's going to happen. The three shifts that I want to focus on is 1, the rate versus the payment strategy. 2, we'll look at negotiating and the negotiating power that is now on the seller side. And 3, how choosing the right lender is going to help you navigate all of this. So let's look at this rate payment strategy and what's changed there. And I think the biggest thing that changed was right after the rates went up. All of a sudden we get this thing called the temporary rate buy down. And people have heard it. I should have done 3. Temporary rate buy down, not just 2. I apologize for that. They call it the 1-0 or the 2-1-0 or the 3-2-1-0. These are all rate buy downs. And what that is, just quickly, is if rates are at 7%, and you get let's just say a 2-1 buy down. Now you're looking at the first year, instead of 7%, you're going to have a 5%. The second year, you'll have a 6%. And then the year 28 through if it's a 30-year fix, 28 through the end, you're having a 7%. So a 3-2-1 is the same thing. If it's 7%, now you're looking at a 4%, then the next year a 5, then the next year a 6, and then a 7 for the remainder. So that's a temporary rate buy down. Those came out. Those became popular. There was also this term that went around called what were they saying? Date the rate, marry the home. So find the home you love, get into it. You have an interest rate, but just date it, because you're going to break up with it eventually and refinance. But what I'm getting at is that did open up some things for the industry. Those are still around. People still do them. Another thing that might have changed that you could have seen is seller concessions. So right now, this is constantly changing. This depends on the market. Right now in the Arizona, at least in the market I'm at here in the Phoenix area, very common to have the sellers pay closing costs. That's just right now, changes all the time. And that's why you want to work with someone who's in the industry all the time, because it does change. Real estate agents, make sure you get a real estate agent that's always in the industry and a loan officer that's constantly doing loans. Part-timers, Can be good if they're your friends and family. You feel like you owe it to them. But I'm telling you, having someone who's constantly in the industry, they're ready to those shifts. They know the shifts. They know appraisers. They know how quick those are coming back or how slow they're coming back. They know, the seller concessions, who's asking, who's getting them. And right now, I'm telling you right now, we're getting seller concessions. We're getting them on almost every deal. And they're anywhere between, $2,000 all the way up to paying all the closing costs up to, $10,000 or more. And so, and even offering money so that people could buy the rate down. So that's part of the seller concessions and the seller credit. Let's also talk about the monthly payment. Now people are really looking at this monthly payment. Before it wasn't as big a deal. Now I almost start the conversation with, what are you comfortable with a month? Because I want to make sure. I have plenty of clients that'll qualify for, $1 million, but they don't want a payment that high. They don't want the $5,000, $6,000, $7,000 payment. They want a payment like $4,500. So that's where we look at, okay, what payment is comfortable for you? And then from there, we can figure out what price range they're going to be comfortable with that payment. Third point is choosing the right lender. Now is more important than ever to choose that right lender. Obviously, it's coming from me as a mortgage guy, but I'm telling you, who you work with is going to determine sometimes whether your offer is accepted. I'm not going to mention names, but there's companies that when a real estate agent gets an offer, and on the pre-qualification, in Arizona, we have pre-qualification forms. On the pre-qualification, it says who, pre-qualified them. And if it's specific companies, real estate agents don't like it. And so it is important to have a lender who real estate agents know or trust, or can get a hold of, or can find out information about that lender if they've never heard of them. So right now it's important to work with a mortgage broker or a mortgage company or a mortgage loan officer who really understands how to structure the loan, because the loan can be structured in so many different ways now. There's so many opportunities and different programs. I feel like we're getting more and more programs all the time. Okay, how are we going to structure this so we don't have a problem with the loan later on? Or how are we going to structure this to get the client the best deal? Or how are we going to structure this so that the seller is happy with the offer? And so a lot of that goes into play, and that really comes down to who you're using as one. Having a good team between the real estate agent and the loan officer, but really the loan officer, how are they going to set that up to be a benefit to you, the client? And so that's another item that we're now paying attention to and focusing on. So what does this mean for you as a buyer? Okay, these 3 points, what do they mean? They mean that the ball is in your court. Okay, right now is the time that the ball is in the court. As I said, I had the 3 years, it was kind of quiet, but the last 6, 7, 8 months have been busy. And that means that people are now making choices, and they're moving, and they're refinancing, and all this stuff is taking place. So right now is the time, if you're on the fence, to really start looking, because you might be able to move sooner than you think. I mean, I have clients who have enough for down payment, but not enough for closing costs. And now's the time to move, because closing costs are being covered by the sellers. So they are able to get in with just a down payment of whatever their down payment's going to be. Right now, I'm seeing people buy who 3-4 years ago, when I was in this industry, I wouldn't have been able to help them because of different programs that now exist. And that's a win. And that's why it's important to kind of look or ask, call me, email me, text me, whatever you need, and find out. I'm not the pushy salesman. I feel like I'm the educator and willing to help people. I'm here to help, and I care more. And I want to create a relationship of continual business, repeat business, referral business. That's how I've set my business up. So who's this channel going to be for? So for this channel, I'm going to focus on Arizona, the real estate market in Arizona in general. Obviously, I live here in Queen Creek. It's my local home. I know the area very well, but that doesn't mean I don't do mortgages all over the place and have real estate agents all over the place. So What I'm going to be focusing on is creating this channel to bring insight into the industry, up to date insight, tips and tricks on refinancing when it makes sense, because it doesn't always make sense. There's plenty of opportunities when people come to me and want to refinance, and we end up saying, you know what, now's not the time. That's what I'm here for, is to give information, and then you can make that decision. We'll talk about mistakes to avoid. You're going to be working with the real estate agent and the loan officer for the next 20, 30 days during a transaction. And so you want to make sure, what mistakes am I going to avoid? I don't want to hit them, all of them, right? We can hit a couple of them, a little bit of bumps, but we don't want to hit all of them, because that would just make it not a fun process for anybody. So in this channel, I'm going to help teach you things that can help you avoid those mistakes. And obviously, we're going to go over what's actually happening in Mesa, in Queen Creek, in Tempe, in Sholo, in Pinetop. We'll go through these things. That way you can see how the market's shifting and what's going on in the real estate market and the mortgage world, which is so exciting. So if you're even thinking about buying, selling, refinancing, just let me know. I'm here to talk. I'm here to help and educate. You can get a hold of me, 480-565-2223. It's my office line. It'll come directly to me, and I'm here to help. We will see you next time.